So even as rates start tightening up, we know our central bank is focusing both on inflation as well as on growth. Currency is now a third factor because if oil really spikes, then that becomes an issue. So they have a third factor now that they have to keep in mind. And it is going to be a challenging balancing act, but you've got the best of minds over there. Continued period of significant uncertainty, and unfortunately this war has created an additional layer of uncertainty. From what we're hearing the last couple of days in the media, let's hope that's true, and let's hope that a truce is closer rather than not only for our economy, not only for our growth, but I think it is terrible when we are sitting in the 21st century for us to invoke our most barbaric selves to try and resolve issues. I thought humankind had progressed more than that. Second is the pandemic. I believe in the last year, as a country, driven by the right moves from our government, vaccination rates are right up there, and the medical solutions that we have, the increase in capacities across hospitals has been quite significant. But as humans, we get complacent when the threat recedes. And this is one uncertainty, the pandemic, that we can do a lot to minimize the next wave. It is by continuing as individuals, those of us who are not vaccinated must go and vaccinate, by following some of those protocols on safety that everybody's been talking about. I would urge the government to accelerate the booster vaccines, give it to more and more people. We have enough examples now from around the world, from the largest other countries, that the boosters are helping. They help not only the vaccinated, but they also help those that are not getting vaccinated for various reasons by just reducing the pool of people that the virus can multiply from. And I would say even mix and match. Let's work on these. Let's also, as a country and as a government, focus on the latest developments on vaccinations and medications, do those trials early on so that we are prepared if there is the other wave. I think if these two are in control, India is poised then for a steady growth going forward. We've started to see that in the last couple of quarters. So even as rates start tightening up, we know our central bank is focusing both on inflation as well as on growth. Currency is now a third factor because if oil really spikes, then that becomes an issue. So they have a third factor now that they have to keep in mind. And it is going to be a challenging balancing act, but you've got the best of minds over there. So in the short term, I think these are the levers which have to be managed. But I think there is a significant medium and long-term opportunity. Keep in mind, the last 20 years, our country has changed dramatically. Our per capita income has more than doubled, which means in the big cities, it is up multiple times. Look at our infrastructure, look at our airports, look at our roads. It is a pleasure to drive out now for the weekend and take a short holiday. There are so many new little locations and small hotels that have come up, which didn't exist 15 years ago. So this country is going through a significant change from being a developing country towards that journey of a developed country with a large educated population, which means a very large domestic consumption base, so that you're not only reliant on exports to build our economy. One is consumer demand. Consumer demand will come when the consumer is secure about the future, and I've already talked about that. Second is consumer savings. Does the average consumer have money to spend? In the last 2 years, as I said, they definitely have more money to spend than what they did earlier. So that is a big positive. Third is product availability. We know with the supply chain disruptions, how product availability has become a problem. Look at two-wheelers and four-wheelers. Look at consumer durables. Wherever there is a chip, there is a shortage because the largest manufacturers of that were China and Taiwan. And from containers not being in the right locations, to ships not moving around, to security issues, to bilateral relations issues, there are multiple issues bearing down on that as well. And lastly is capacities. I believe that certain sectors, if you look at commodities, for example, have already started in building new capacities from last year. I believe that as some of the supply chain disruptions reduce, as India builds greater reliance on producing goods within, this will drive change. So if you ask me next 1 year, okay, the next 1 year is not going to be strong growth. But as we build out these capabilities ourselves, then we can be sure in future years that we are not in the same kind of situation again. Fortunately, unlike so many other countries that have small populations, they don't have the wherewithal to put these plants up. We have that wherewithal. Plus, the world is looking for India to become a strong manufacturing base in Asia to support itself. Typically, large successful companies, I would say, ended up controlling capital, I would say assets, land, ability to negotiate large machineries or large plants much cheaper, and distribution networks, large brands, entire sales distribution network you can monopolize, cutting out the small new startup. The digital world is dramatically changing that. So you can be an Airbnb without owning a single hotel room. You can be an Ola without owning a single car. So you no longer need to play by the traditional rules of the last 200 years or ever since the industrial age, at least for many sectors. But look at banking. What is banking? Banking is basically about providing a safe haven for people to put their money there and then selling them lots of little services, from different types of loans for your home, for your holiday, for your car. You want some foreign exchange, you're traveling, charge you a little bit for that. You want a credit card, charge you a little bit for that. So you charged a little bit of money for a wide variety of things. And the person came to you because your money was safely kept with that person. And that's how you made money. However, with the decentralization that we are seeing on financial services, at least on the asset side, because that's what regulators have currently allowed. Today, if you want a home loan, you can go to 10 different lenders, whether NBFCs, home loan companies, or banks. You don't have to go to your own bank, and most people don't necessarily go unless their bank gives them a better rate. So you shop. Same for a car loan. Same if you need a personal or a business loan. So suddenly, having that large scale, having 5,000 branches in the digital world is no longer a benefit. If at all, it holds you back. Same is true on the insurance side. So the digital world is breaking a lot of these chains of monopolies from the past. So I actually see the days of companies being successful only because of size becoming less and less. If at all, size can be a disadvantage because it hinders innovation, it hinders risk-taking, and each of these will be important as traditional business models break down going forward. The common man still trusts very much our banking system. That's why even in the last couple of years, after some of those defaults, money has not run away from public sector or even the scheduled private sector banks. But it is incumbent upon us to make sure that we don't have those incidences repeating, and we strengthen our own systems, processes. RBI is already strengthening, IRD is strengthening regulatory oversight. Do it in a sensible, practical manner. Don't throttle business, but do it in a manner which continues to give greater confidence. So that is the first part I would say on trust. Second, I think what is very interesting is to think of a digital currency. Because if you think of, and what RBI is looking at, if you think of a digital currency, do you then even need to worry about where your money is being saved? See, keep in mind that the banking institution primarily existed for that bank branch, which was close to us as customers, where we could go deposit our money, deposit some of our valuables, take from their money, because money was physical. Today, with money being digital and with RBI taking it to the next level, if they can and come out with a digital rupee, what stops RBI from opening 1.3 billion accounts, customer accounts, citizen accounts? It's only a technology platform that has to be put in place. What is then the need for bank branch at all? And as a customer, if you can keep your money with RBI, you're very safe. Banks have a big advantage, especially over NBFCs, because they hold the common man's money. If they're not going to hold it, or it's going to become expensive to hold it, because otherwise you can keep it with RBI, then that competitive edge disappears. The entire CASA benefit disappears. They have to earn their own liquidity then. So to me, that's where the sovereign digital currency becomes relevant. As individuals, we trust what our central bank is doing in the valuation of our currency. But if you ask each one of us, how do you know that today the rupee is 76.70 paisa is correct and it should not be 75.70? None of us know that. But we trust in a source. What cryptos are saying is, trust in a source called crypto. Now, for many of us, we may not understand what is the underlying algo and how does a blockchain decentralized ledger system work for us to trust. But as that information becomes clearer and clearer, if they can establish trust, that makes a very big difference. So for cryptocurrencies also, there are limits. That's why you do the crypto mining, and I think 60 or 70% of your Bitcoin is already mined, 30% or something left. So it has finite value. If it had infinite value, then infinite volume, then there would be no value. Second, it is traded. Started off maybe in the dark web. Now many governments are using it. Interestingly, countries will never want this because currency is a very strong method of keeping power as a country. But look at the disadvantage. In the war right now, the normal Russian or the normal Ukrainian, they are in a very terrible situation. They can't use their currency. If they all had Bitcoin or Ethereum or some other currency, they would be able to use it, no? So there is merit to say that an independent currency in the future has some place. How this evolves, as I said, I'm not an expert. It will evolve into an interesting situation. And what role governments play? Do they ban it completely? Then it won't happen. If not, I believe they should not. They must learn how to use it, monitor it, regulate it, but let it create a life of its own.